Hello again, we're back with more updates. The US stock market tumbled on Thursday, marking one of its worst declines since the spring sell-off, as Nvidia and other leading AI stocks continued to slide amid concerns that their valuations had risen too quickly. Selling spread beyond the AI sector, with traders increasingly worried that the Federal Reserve may not deliver another interest rate cut in December, despite earlier expectations.
White House National Economic Council Director Kevin Hassett told reporters that the precise reasons for market movements are often unclear, but said investors appeared to be reacting to the possibility that the Fed is becoming less likely to cut rates.
It looks, you never know really why markets move, but the story of today is that it's because markets are thinking that the Fed is less likely to cut rates. If you look at the federal funds futures, they are quite a bit lower today. And I think that that's because of some of the speeches that we've been reading from Federal Reserve officials. But I would just remind that based on fundamentals, the two things that changed since the last meeting, or second to last meeting, are that we had a shutdown that lowered estimates of GDP by 1 to 1.5%, and we had inflation numbers that were much lower than expected. And so the fact that the Fed would move from a posture of 3 rate cuts to 2 after getting news that really says the opposite makes you really wonder what they're thinking over there.
The Fed stance has been complicated by the recent U.S. government shutdown, which delayed key updates on the job market and other economic indicators. The lack of data has made it harder for policymakers to determine whether a cooling labor market or persistent inflation poses the greater risk.